Most people are staring at XRP right now and asking the wrong question. They're asking, why hasn't XRP pumped yet? Why is price still stuck around 190? Where is the reaction to over $1 billion in ETF demand? But if you're asking those questions, you're already late to understanding what's really happening, because this is not a price story, this is a control story. And today, I want to walk you through why XRP not moving might be the strongest signal we've seen all year. Not hype, not moon math, just structure, positioning, and behavior. And by the end of this video, you'll understand why flat price plus heavy demand is one of the most misunderstood and most dangerous phases for retail to ignore. Let's start with the obvious contradiction. On one side, we have spot XRP ETFs quietly pulling in capital. Total net assets have now passed $1.2 billion. Not in one explosive day, not in a hype-driven spike, but consistently. Day after day, inflows remain positive, even on boring, low-volatility sessions. That matters, because institutions don't chase excitement. They build exposure slowly. And yet, XRP price is still hovering around 190 to 195. No fireworks, no breakout, no retail euphoria. That disconnect is what's confusing people. But here's the key insight most miss. When demand is real and price doesn't react, it means supply is being absorbed deliberately. Not fought, not chased, absorbed. Let's clear up one massive misunderstanding. ETFs do not exist to make price explode. ETFs exist to normalize exposure, provide compliant access, build long-term allocation rails. When ETFs are accumulating and price stays flat, it usually means one thing. Someone is selling into that demand without panic, and that someone is almost never retail. Retail doesn't sell calmly. Retail sells emotionally, which brings us to the second force at play right now. According to on-chain data, wallets holding between 100 million and 1 billion XRP have started increasing their share again. After a brief decline earlier in the month, whale ownership climbed back toward 12.8% of total supply. And this wasn't slow or accidental. It was sharp, intentional, positioned. That tells us something critical. Large holders are not reacting to price. They're acting ahead of it. When whales accumulate during flat price action, it usually signals one of two things. They expect higher prices later. They want control before volatility returns. Often, it's both. This is what a power transfer phase looks like. Retail loses patience. Smart money regains positioning. Now, let's talk about the technicals, because this is where weak hands get shaken. XRP is still trading below its major EMAs. 20-day, 50-day, 100-day, 200-day momentum indicators aren't screaming bullish either. RSI sits around 43, not oversold, not strong. OBV flattened after earlier selling. MACD remains below zero, but downside momentum is slowing. To most traders, this looks uninspiring. But structurally, it tells a very different story. Selling pressure has cooled, without price collapsing. That means sellers are exhausted. Buyers are patient. Volatility is being compressed. This is not a breakdown. This is stabilization under accumulation. And historically, this is the phase that confuses people the most. This is exactly why most traders get chopped up. They react to candles instead of understanding phases. And this is also why platforms like Unic are becoming more relevant in markets like this. Unic isn't built for hype trading. It's built for structured positioning, where capital rotates quietly before volatility shows up. Whether it's pre-market OTC, pre-order OTC, or strategic positioning tools, Unic is designed for environments where price lags behavior, not the other way around. That's where real opportunity usually forms. Now let's go back to XRP, because this is where the story gets more interesting. Here's the uncomfortable truth. Retail does not control XRP price at this stage. Control is split between institutional ETF flows, large whale wallets, market makers managing liquidity. Retail volume right now is muted, sentiment is bored, engagement is down, and that's not bearish. That's exactly what accumulation phases look like before repricing. Markets rarely reward excitement. They reward positioning during indifference. And that's the phase XRP is currently in. Let me be very clear here. If $1.2 billion in ETF demand had come in during a hype cycle, XRP would have spiked and dumped. The fact that price hasn't reacted impulsively tells us liquidity is deep enough to absorb flows. Sellers are strategic, not panicked. Buyers are long-term, not chasing. That combination is rare. It's also dangerous for anyone waiting for confirmation on the chart, because by the time confirmation shows up, control is already locked in. We need to say this honestly. XRP is not in a bull run right now. Trend hasn't flipped. Momentum hasn't broken out. Retail hasn't returned. But that doesn't mean nothing is happening. It means the groundwork is being laid. Institutions don't buy tops. They buy boredom, they buy confusion, they buy impatience, and then they wait. This is also why more experienced traders are shifting away from pure spot speculation and towards structured OTC positioning. Platforms like Unic exist for moments exactly like this, when price is flat, sentiment is dull, but data shows positioning underneath. Unic's model is built around early access, controlled exposure, and capital efficiency, not emotional entries. If you understand market phases, you understand why that matters before the move, not after. Here's the realistic outlook. If ETF inflows remain steady, if whale supply continues to rise, if selling pressure stays muted, then XRP doesn't need hype to move. It needs one trigger: a liquidity expansion, a macro shift, or a narrative rotation back into large caps. When that happens, price discovery doesn't start from zero. It starts from compressed positioning. That's when moves get fast and unforgiving. Let me be blunt. If this phase felt exciting, you'd already be late. Markets don't reward comfort. They reward patience during confusion. Right now, XRP looks boring, controlled, and emotionally draining. That's usually when ownership transfers from weak hands to strong ones. The fact that price hasn't broken down despite 1.2B plus in ETF assets, rising whale ownership reduced selling pressure, isn't a failure, it's a signal. So here's where we are. XRP isn't moving because it doesn't need to, yet. ETF demand is consistent. Whales are positioning. Selling pressure is fading. Control is shifting quietly. And historically, that's how markets prepare for their next decisive move. Not with fireworks, with silence. If you're watching XRP and wondering why nothing is happening, the better question might be, what's happening that you're not being shown on the chart? Let me know your thoughts in the comments. And as always, this is educational content, not financial advice. Stay patient, stay aware.